Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and we are back on the Financial Investor website. So if you head over to financial-investor.com, I have my article written up. It's going to be in the description below. It's also going to be in the comment section. So if you do want to head over to my website, take a look at this article. It's posted there already today on Tuesday. So I did want to continue to write these out because I like the visual effect, and kind of without having to view the video, I could take a look at what stocks that we covered 3 months ago and where were they price, yield, and all sort of financial statistics. So we've already gone through, we screened around 30-40 stocks. These all have PEs less than 25, yields of over 2%, raising revenue and net income, and then it has some free cash flow that it is either positive over the last 10 years or it does dip due to specific reasons, which we don't really cover, but that can all be uncovered in their 10Ks and their quarterly reports. So we also go over the dividend dates of the stocks, the price comparisons to yield, the PE comparison to the industry, the payout ratio, dividend history, and a couple other statistics. So that is all coming up here. Of course, thank you guys out there. We're almost at 1,000 subscribers. We're at 656. My current goal is 1,000 subscribers by June, so we're right along the line on that goal. I believe 100% that we will make it, and then from there on, the next goal will be right around 5,000 or so. So also on Facebook, anyone who's been wanting to connect, they always, I have a lot of people write me or leave comments, and I always reply back to you guys. It's kind of fun to chat up with a lot of my viewers and subscribers. So if you don't follow me over on Facebook, you can follow me along. We have a private group, it's a private group. It's got some activity in there. So let's go ahead and get on with this. So these are stocks all ordered by Dividend dates from April 2nd to April 6th. So the very first one is ticker symbol CVBF. This is CVB Financial. It's a holding company over in California. Its name is Citizens Business Bank, and it's one of the largest banks headquartered in the Inland Empire. It also serves 40 cities and 45 banking centers in the Inland Empire, Orange, and Los Angeles counties and communities throughout the Central Valley of California. So this one, Dividend, is the 4th of April, which is a Wednesday. So to be eligible for the Dividend date, you must buy them on Tuesday or prior. Hold them until the Dividend date, and then you would get paid out on the 19th of April, which is the same month. So you buy it early in the month, you get paid out that dividend midway through the month. So here we're showing their revenue, free cash flow, and net income over the last 10 years. So free cash flow is up roughly 10% every single year over the last 10 years, or at 105% over the last 10 years. Their revenue net income is around 6% average per year, or at around 62-65% over the last 10 years. So very nice growth in revenue, free cash flow, and net income. Next, we have, this is their year. I like to just take a look at their year, look where their dividends move, their price, their dividend yield, their price to book value, and their PE ratio. So you can see here that they had an increase in their dividend from 12 cents to 14 cents right around July timeframe. They're currently priced at $22.50. So they did have a very nice climb in September, and then have kind of been rocking back and forth due to the way we've been kind of having with the markets. They're currently trading at a yield of 2.4. They have a PE of 23.68, and their price to book value is at a steady 2.3. So ticker symbol CVBF stock, when charted, it does show the current stock as a higher price to yield, which would indicate it may be overvalued at this time, but the stock is above the industry price earnings average, below 60% payout ratio, dividend growth for the last 4 years, price to book value of 2.31, which is lower than 3.0, where value investors would consider a value. So this could be a potential buy. The price is over the yield right now, so it's not really a bargain, but stock has a price to earnings average of 24.1. The industry for the financials is right around 18. The dividend flip-flops right around 2.4, 2.49 depending on the day. Today we had a down day in financials, so the yield is going to be a little bit higher here. The annualized payout if you multiply 14 by 4, you're going to get 56 cents per share for the entire year. Their current payout ratio is at a 43.4, which is very nice for a financial company. It is sitting below the 60% payout ratio, which I like to look for, which means if they do go through some sort of a financial issue where their revenue gets cut in half, their payout ratio may increase to right around 80%, but it's still sustainable. Their dividend growth, again, 4 years. Their annual dividend growth, they just recently increased their dividend from 12 cents to 14 cents each quarter. That's an increase of roughly 16.67% where they're currently trading at. So stock number 2, we have Cisco Systems. So, of course, Cisco Systems, ticker symbol CSCO, is a technology company that designs, manufactures, and sells network equipment. They're also getting into security. The company focuses on 3 main segments, which includes enterprise and service provider, small business, and home. 1 second. Okay, and we're back. So Cisco themselves, I was invested quite a bit in Cisco. I use Cisco all the time. I'm setting up a switch at work today, and they're getting into all sorts of security. So they have Prime, StealthWatch, ICE, TACAX, all sorts of systems. I really like Cisco. It's a great stock, and I may eventually end up buying more into them, but at this time, I am not a shareholder. Ex-dividend date is on 4 April, which is, again, Wednesday. So, again, you need to buy them on Tuesday or prior to be eligible for the ex-dividend date on Wednesday. So, buy on Tuesday or prior, hold until Wednesday. After Wednesday, you can sell off that stock if you're positive. You can get those capital gains, and you get the ex-dividend, which is paid out on the 25th of April. Again, if you guys have not seen the video on how the ex-dividend date works and how that money is removed from the stock, go ahead and check out the video in the top right corner on how ex-dividends work. I have a great example using AT&T, and their ex-dividend gets, the dividend payout gets pulled out on the ex-dividend date, and it shows it all on there using the metrics there. So Cisco revenue is up 24% over the last 10 years. Free cash flow up 36%, and their net income is up 19.34%. So not a lot of, this stock has not moved that much over the last 10 years. Now, if you take, 20 and divide it by 2, or 20 and divide it by 10, you're going to get 2. So this stock only moved up roughly 2% in net income over the last 10 years, but they have begun to pick up quite a bit more. Again, right around there with the same with the revenue. Now their net income, or their free cash flow, is actually up by 36%. So 36 by 10, that's 3.6% average per year. So a little bit better, but Cisco is turning it around. They were really flat where they were really relying on their network equipment, whereas now they're trying to move into more sort of like Microsoft and a couple of these other companies where they have perpetual licenses where you have to license their equipment, and then they can charge you every single year. So here we have Cisco here for the year. They just increased their dividend at the start of the year from around 29 cents to 33 cents. That's an increase of roughly 13.79%. They're currently trading at $42.80. I bought this stock back in July or May timeframe. They were $33 when I bought this stock. They're currently trading at $42.80. I sold it off during the whole sellout. It was one of my stocks I was really up on the position. I sold out of it. You can see here during the February, it has easily recovered through that whole turmoil. But, markets are always going to go up and down. I was just kind of moving into real estate, so I wanted to funnel my money elsewhere. So here we are. We have our dividend yield, which is at 2.71%, where the price is currently at $42.80. And the price to earnings ratio is 21.89. The price to book value is a little bit high right now at a 3.96. So Cisco stock, when charted, it does show the current stock has a higher price to yield, which would indicate it may be overvalued at this time. The stock is under in the industry price to earnings average. It is sitting below 60% payout ratio, has had dividend growth for the last 7 years, and the price to book ratio is at 3.96, which is higher than 3.0, where value investors would consider a value. So the stock is at a 21.89 PE. The industry for technology is right around 26. The dividend yield right now trades at a 2.71, 3.09. They just increased their dividend very recently. You can see here just recently, Not in January. Well, actually, maybe in January, but they declared their dividend increase in their upcoming dividend payout, which is this one right now. If you capture this one, you're going to get 33 cents for every share of them that you own. So it's going to give you a dividend yield of 3.09 due to that increase. So this is actually wrong because this is taking this dividend right here instead of the new dividend, which gives it a dividend yield of 3.09. So they do pay out $1.32 per share. So 66 and 66 is the dollar. Boy, $1.28. Boy, I can't do the math on that. 66 and 6, 12, 132. Yeah. Okay, 132 exactly. So it's perfect math there. So payout ratio under 60% at 56.7. Dividend growth for the last 7 years, and they just increased their dividend by roughly 13.79%. Now our last and final stock is ticker symbol JPM. This is JP Morgan Chase & Company. It is a multinational bank and financial service company. It provides investment banking, financial services for consumer and small business and commercial banking, financial transaction processing, asset management, and private equity management. Based out of New York, New York. It is the largest bank in the United States in terms of assets. The ex-dividend date is on the 5th of April, which is Thursday, so you do need to buy the stock on Wednesday or prior. Hold it until Thursday. If you're up in the position, you can sell it off and collect that dividend payout on the 30th of April. So this one, I included it in my list because the net income, the revenue is really nice. The free cash flow, this one, while I do look at it, I don't base my picks off of it because free cash flow can, free cash flow in these financials or just in any company can be just accumulated very quickly, and they can use this free cash flow to do acquisitions. So buying up smaller companies, buying up things that make themselves grow, as long as they're using it very nicely. Here you can see here that they had a very large dip. This is probably this is after the financial, so 2008. This is after 2008. So these areas here where these dips, those are just areas you have to take a look at their 10Ks. Go back over the last 5-10 years, take a look where their free cash flow had went. So they still have very nice numbers, 33% net income every single year. Let's see here, 4% growth in revenue over the last 10 years. And their free cash flow, while it's negative, it doesn't really matter because they'll revise it, bring it back up here shortly. So here again, we have their data over the last year. They're currently paying out 56 cents per share. They're currently priced at $108.33. Their dividend yield is at a 1.96. Now, this one trades right around a 2.07, 1.96, just depending on the markets. The financials just took a dip the last Friday and then today. So they normally trade a little bit above a 2.0. That's why I included it in my list. And their PE ratio is at a 17.14, and their price to book is at a 1.6. So this is probably one of the best as far as price to book value that you're going to get for a financial company. So JPM stock, when charted, it shows that the current stock has a higher price to yield, which would indicate it may be overvalued at this time. The stock is under in the industry price earnings average, below 60% payout ratio. Dividend growth for the last 7 years, price to book value of 1.61, which is lower than 3.0, where value investors would consider a value. The stock is trading at a 19.5 PE. The industry is 20.9, so it's right on up there, but not too bad. The dividend yield sits right around a 1.96, 2.07. If you multiply 56 by 4, you're going to get $2.24 per share for the entire year for each share that you own. That's a payout ratio of 25.2, which is very nice even in downturn markets. The dividend growth is the last 7 years, and they increased their dividend by roughly 12%. So they were paying out a little over 50 cents, and they bumped it up to 56 cents. So that's an increase of 12%. And that is it for this video. Those are the 3 stocks out of all the stocks that I screened that were worth mentioning coming up next week. So if you were involved in any of them or looking to buy any of them, let me know in the comment section below. I hope you did enjoy this video and this article. If you did like the video and article, remember to share, comment, subscribe for future financial videos. And of course, that is it. So Thank you guys for tuning in. If you have any questions, leave it in the comment section below. As a friendly disclaimer, I am not a financial advisor or tax professional. The information in these videos is for entertainment and fun. This is not investment advice. This is just me as a financial investor trying to help others make their money work for them. And of course, thank you guys for tuning in. I will see you next time. Have a great day. Bye.